Aloha YouTube. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is October 15th. It is Thursday 2020 and we are looking at my Roth IRA. I use M1 Finance for my brokerage for my Roth IRA. If you haven't seen my previous videos, just to let you know, I do use three main brokerages, and I have them broken up for certain strategies for investing, as I do a version of the barbell approach to investing. So, M1 Finance has my Roth IRA, which in my opinion is pretty conservative. We'll look at some of my holdings here a little. Well, I'll actually look at the slices if you want to see my individual holdings. I do have other videos for that. If you want to check my playlist, you can see my previous videos for M1 Finance, Fidelity, which is my dividend growth portfolio. It's an individual account. I do have two videos, I believe, yesterday because it's earnings season, and I own Bank of America and JP Morgan and Johnson & Johnson, and their earnings were just announced. So I did do two videos yesterday that you can check out in the playlist as well too. Also in the playlist, you'll see my portfolio for Robinhood, which is my growth portfolio. So mainly capital gains is what I'm looking for that one. So that's the other side to the barbell approach is capital gains growth. And then I have two portfolios for dividend investing because I am primarily a dividend investor. Probably maybe 85% or 90% of my portfolios is, or of all my accounts, I should say, not portfolios, but of all my accounts is dividend companies, blue chip, Fortune 500 companies. I do own what I consider a little bit more risky in Robinhood, and I'll be doing a video on a couple of those tomorrow for you, as well as my dividend tracking video tomorrow to end the week to show you what my future estimated dividend payment is going to be. Not just for 2020, but all the way out to 2044. So look for that video. It also shows you my gains, and you can check all my playlists if you want to see how my accounts have grown over the last 15 months, going on 16 months now, somewhere around there. So I did start my Roth IRA in September of last year. So this $7,300 isn't all for this contribution year, 2020. If we look at my funding history here, you can see that over 4,800 is for 2020, and over 1,900 was for 2019. And I did that on purpose because I wanted to start the year fresh, even though your contribution time frame was extended from last year because the tax deadline was extended. So this year I'm hoping to get at that 6,000 maximum contribution. There are significant tax advantages to having a Roth IRA. Basically, you don't have to pay any taxes once you withdraw, once you get to that retirement age that you're allowed to draw from your Roth IRA. So 6,000 every single year is the goal. So hopefully I will have one full year behind me, and then every year after this year I'll be able to continue to maximize that at the $6,000. So that's the 7380. If you've seen my previous videos, you know that at one time this was sitting up over, I believe it was 7,500, 7,400 as of last week. So I did a video last week where it was 7,400. So I have lost and gained. You can see my total return is now 24% versus 28% in that previous video, I believe. So, and it's because the stock market has been volatile, and for some of the reasons that I mentioned already. But I still feel that I'm doing pretty good. This is my first recession as an investor in my mid-40s, so I feel like I'm taking a little bit risk, but I started late, so I kind of got to make up some extra ground. So, and my dividend tracker video helps keep me on track, or my dividend tracker that I used helps keep me on track, and seeing the videos helps me keep me on track too. So, but earned dividends so far over $97. Market gain, not including dividends, is over $600, and then with the dividends over $730. So let's go ahead and look into what I'm going to buy today. Pretty much every Thursday I do my buy. Next week I might increase what I'm going to buy. My strategy for buying is either the ex-dividend date or one of my holdings makes a significant dip, which I feel is a good buying opportunity. So I'm not concerned with the companies that I hold if they dip because I plan on holding them for the long term, especially in my Roth IRA. My Fidelity, I don't mind switching it up from time to time, and my Robinhood, I definitely am going to switch it up just because it's more capital gains. But my Roth IRA, I don't mind if companies fall, 10 or 12%, which I hope they don't fall 10 or 12%. I hope they only fall like 2 or 3% and gain 4 and 5%. But these companies are solid. They're dividend paying companies, especially in my blue chip slice here that you can see all time. I've got really, really good gains with all of these in my blue chip slice. So I'm going to add to Colgate Palmolive. Their ex-dividend date is coming up on the 22nd of this month, and you'll be paid the 44 cents per share in November. I believe it's November 15th, November 14th, somewhere around there. So far, I have earned $3.53 in dividends since I've owned this, since I've owned Colgate Palmolive. And scrolling down here, you can see that I own over 5.5 shares, fractional shares. The majority of my portfolio, probably 90%, is fractional shares buying. That's why I like M1 Finance, and now Robinhood allows for fractional shares, and Fidelity does too. Almost everybody's allowing fractional shares, and almost everybody is allowing is not charging any fees as well too. So the good thing about Colgate Palmolive, if you aren't familiar with them, not only are they considered a sleep well at night stock because they have been increasing their dividend payment for over 50 years, they are considered a dividend king, is that they are consumer defensive. As a consumer defensive company, they own products that you need every single day. And some of those products are soap, hand sanitizer, toilet paper, toothpaste, toothbrushes. I mean, just things that you just need on a regular basis. So originally I was kind of like, let me go all consumer defensive, but that's not the best way to do it because there are always sectors that are higher than others during given times. It just so happens that consumer defensive does very well in recessions when consumer discretionary can fall. And for this recession that we are in, it really was a big deal as you saw the shortages in the grocery stores when you went to go look for stuff. So I have $169. I do contribute $100 every single week into this portfolio. The 69 cents comes from the ETF that I own that tracks the Dow Jones Industrial Average. Ticker symbol is DIA. It is a monthly paying dividend ETF. So every single month I get 60. Well, actually, next month it'll be more because I added to that ETF. I think I added another share and a half, but I believe it's 69 cents per share. So Colgate Palmolive right now I own for $446 and some change. My buy order is going to be placed here. And then next week, and you can see here because I am in Hawaii, the trading window opens 3:30 a.m. So about 4 a.m. usually is when the trade will go through. Hit confirm buy here. Order submitted for your buy Colgate Palmolive, and then we'll hit done. So that is my buy for the week. Next week I'm looking at Procter & Gamble, which is also considered another one of those sleep well at night holdings where you just know management is focused on that dividend. The stocks for these consumer defensives don't always go super, super high up. But if you look at Colgate Palmolive here, yes, it is only trading at $79, and its 52-week high was about $80. So it's really not far from its 52-week high. But regardless of that, it's going to pop up here in just a second. You can see over the year, its return right here. And this is according to Seeking Alpha. I'll zoom in just a little bit more here so that you can see this. This is showing on seekingalpha.com. Over the year, Colgate Palmolive is up 15%. Over 5 years, it's up over 21%. And over 10 years, it is up over 110%. So it's slow gains, but it's slow gains that pays you dividends and is not always going to fall off the planet. So, and you can see over the last 10 years, all the way back 2011 here, that it was trading at 39 bucks, and I think it would be fair to say that it has grown with the economy and has grown with the times. So now it's all the way up into $79, and hopefully it will get to that 52-week high of 80 and more. That will give me good capital gains, but regardless, they're still going to keep paying that dividend. And if we click on dividends here and seeking alpha, zoom in a little bit, and you can see their dividend yield is over 2%. Amount 44 cents per share. They did increase this as of April, I believe it was, of last year, or March of last year. So I already have gotten one pay raise since I've owned this company, and the ex-dividend date is 10/22. So you want to get your shares in before 10/22 if you want to receive that dividend on November 16th of this year. So subscribe to the channel if you haven't already. Also like the video if you find it informative. I hope everybody stays safe and healthy. Mahalo and aloha.